Good afternoon, everyone. My name is Alana Brown, and I am here with you from Nabers Group and Solo401k.com. Today is August 18th, and it's our Wednesday webinar series. Do me a favor, let me know over here. Can you hear me? Can you see me? We have a very exciting presentation for today. We're going to go over roles and responsibilities. So it's going to be your roles and our role here at Nabers Group. So very exciting. Wonderful. Hi, Mary Beth, Eric, Kazuki, Luis, Jonathan. Awesome. Thank you, everyone. While I'm going through the presentation, if you guys have any questions at all, go ahead and post them down here. Perfect. Well, let's jump in. Solo 401k roles and responsibilities. Quick disclaimer, like we always do, we are not the replacement for your CPA or your legal counsel. We are your IRS plan document providers. We provide you with a compliant plan. And of course, we are here for support and education. A little bit about Nabers Group. We launched the IRA LLC in 2003. And the Solo401k.com in 2006. So we've been doing this for a long time. What's really great is that all of us here at Nabers Group, all of us team members, we all have our own checkbook control plans. So we've used them. We know how to talk about them. We've been through the experience. So it makes it really much easier for us to relate to you guys going through these steps. So what is our group, us being Nabers Group? So we provide you with the 401k documents and as well as support while you're getting your plan set up. So as the 401k document providers, we provide you with a version of our 401k plan, which of course is always approved by the IRS. This is very important. You could find our name on the IRS website. We're here to provide any mandatory amendments and document updates, changes in plan language, increase in contribution limits. These are things that happen every year. Additional things that we do, say your address changes. Maybe you want to add a trustee. Or you have a different sponsoring business. We can do all these changes for you. It's typically free as well. And of course, like most of you that know, that are our clients right now, you have access to your documents all the time. There's no need to contact us. You have your control of your documents, just like how you have control of your entire retirement plan and investments and all that great stuff. Of course, we provide support. And I think this is one of our really shining stars of Nabers Group is we have such a great support team. You can call, email, chat with us. But not only that, we have 3 great avenues where you can get support without even talking to us. So we have a knowledge base, our network, our website. If you haven't seen these 3 items and you're a client of ours, you are missing out. So make sure you check all of this out. So our knowledge base, that's support.solo401k.com. This you can type in, any kind of keyword. Maybe you want to open up a crypto exchange. You're looking into Kraken. Type Kraken in. We have a guide on how to open up your Kraken exchange. Let's say you need a CPA that's, literate, the Solo 401k. Type in CPA. We have a list. So definitely check out our knowledge base. Then there's our network. Our network is a great place to post questions, to connect with like-minded investors. All of us team members are in here every day answering questions. We typically will get your question answered that day. So utilize this resource. And you can also find all of our past webinars here under past events. So if you haven't been here, absolutely sign up today. It is free. Solo401k.net. And our website. Our website is like having a solo 401k library at your fingertips. We have calculators. We have information all about the solo 401k, about contributions, about investments. Also from here, you can hit our network and our knowledge base. So this is a great place to start, solo401k.com. What else do we do? Well, we've created tons of different software to make, your solo 401k duties much easier. So we have the Form 5500 EZ generator. I know a bunch of you have used this in the past few weeks because it was due at the end of July. We have the participant loan generator. Other companies charge when you need documentation for taking your own loan out. You have access to this generator whenever you need it. Also, the rollover request generator. It just makes it very easy to do your rollovers correctly and for the releasing custodian to do them correctly as well. Contribution forms, in-plan conversion forms, distribution forms. You're going to find all of this on your dashboard. So use them. We created them to make your life easier, not ours. We did this for you. So the participant loan generator, you'll find that in your dashboard. Just click loans. You'll see there's also a video. We try to put as many videos as possible. We know that visually seeing things makes things easier, answers questions. So watch that video, generate your loan. So this is what will happen. You'll get all of your documentation. There's about 12 pages. You'll have the promissory note, the amortization schedule. So you'll generate your participant loan documents, you'll sign it, and now your loan is brought into existence. Just write yourself a check from your trust checking account or brokerage account to you personally, and you've done it. You've taken the participant loan out. The Form 5500 EZ generator. So go back into your dashboard. Under Forms, you'll see Form 5500 EZ. All you'll do is answer a few questions. We don't actually do the form for you because remember, we don't know what you have. And this form requires, an understanding of what's in your retirement account. So that's why we created this software. We've made it very easy. So you'll answer the appropriate questions. Of course, if any of these questions, are confusing, don't make sense, call us, email us, chat on our website. Very simple. Answer those questions, click Create Form 5500 EZ, and voila, there it is. All you have to do is mail it in. I know this year they started e-filing, so still generate this form, have it in front of you. So if you're going to e-file it, just refer back to this. So either way, mail this in or do the e-file, but use our generator. Okay, so that was Nabers Group's role in your solo 401k. Let's talk a little bit about your role. You play 4 different roles in the solo 401k. You're the plan administrator. You're the employee participating in your plan. You are the employer, the business owner, sponsoring the plan. You are also the plan trustee, and you're deciding where to invest your plan assets. So let's dive in. Let's talk a little bit about your job as being the plan administrator. So your most important task is record keeping. So you're keeping track of your investments, contributions, distributions, rollovers. So you're managing the daily goings of the 401k, as well as making sure that you're getting these IRS filings or requirements done. As you guys may know or not know, there's no tax return for the solo 401k, but there are a few things that you do need to do, such as 1099-Rs, the Form 5500 EZ that we just went over. So you as the plan administrator, you're in charge of getting these done. So record keeping. Everyone does this a little different. You can use QuickBooks, you can use a spreadsheet. Definitely use, the dashboard we've provided for you. You can upload documents there. It's nice to have a central area to keep things. You may also want to hire a bookkeeper. All of you here are small business owners, so you're busy. Your time is very valuable. So paying someone to do this might be worth it. And it's not that expensive. There's just not that much going on. So it's not going to cost that much. But what we see mostly is QuickBooks, spreadsheet. I use a spreadsheet. We have a great example of a spreadsheet. So this is just an example. A lot of people always ask, they're not sure how to keep records. So take a look at this. It doesn't have to be exactly like this. So what you can see is, Jane Doe, John Doe. So this is obviously two people on a plan because they're spouses. They're allowed to be on the same plan. They're both working for the business. They're being compensated. So keeping track of their individual items, their rollovers, their contributions. And then you could see the investments, the bottom there. So this is a great example. Like I said, doesn't have to look just like this. Just something for you to, look at, get ideas. I'll leave this up for a few more seconds because I know a lot of people are probably interested in this. Here's another example. So this is contributions. You see John and Jane, their contributions are separate. Being a good plan administrator also means keeping your funds separate. You don't have to, but it's highly, highly recommended. It'll make your life easier as the plan administrator. So here's a great example of how to, keep good records on those contributions. Okay, a few IRS requirements for the plan administrator, and you guys all know who that is. It's you. So you're going to want to formally elect your contributions. You want to report traditional contributions on your tax return. You may have a 1099-R to do. And also that Form 5500 EZ. So formally electing your contributions. So you need to formally elect them by December 31st. It's just your employee contributions. And I know it might seem a little silly, but it is an IRS rule and we all want to be following IRS rules, right? So it's quite simple. Just, use the contribution form from your either your solo 401k documents or in the dashboard. And you're really just going to write down what you plan on contributing for your employee contribution. It may change, but if you have an idea, you need to, just fill out this form. So we never need a copy of anything. So you're going to want to put it somewhere safe, give it to your CPA, But just remember, you do have until your tax return for your business to actually deposit your contributions. So I know this sounds a little silly, but if the IRS ever audits you and they want to see that you've formally elected your contributions, you've done it. So let's take a look at Kiko's example. So Kiko formally elected his contributions on December 28th. Good job, Kiko, because the deadline is December 31st. Kiko has an S Corp. So that means he has till March 15th to actually deposit his contributions. So Kiko makes his contributions on March 1st right into his solo 401k trust checking account. So this is the contribution form. You guys all have this. Fairly simple. All Kiko did was put in that $19,500 and for what plan year, signed it, and kept it for his own records. So pretty easy. Just do it. So reporting traditional contributions. Of course, you guys want to do this. You are lowering your taxable income. You want to work closely, of course, with your CPA, deciding on, are you going to do Roth contributions? Are you going to do traditional? That's something, you don't want to discuss with us. You want to discuss with your CPA, your tax advisors. But what's important is if you're making those traditional contributions, you're reporting it on your taxes. Roth 401k contributions do not need to be reported because you're not getting that tax deduction. So it's not necessary. You do want to keep records of your Roth 401k contributions for yourself, but it's not necessary to report that to the IRS. For a sole proprietor or an LLC, you're going to deduct the contributions for yourself on your income tax return. Multi-member LLC or a partnership, you guys have Schedule K1, and that'll show each partner's earnings from the business and can document the planned contribution. For an S Corp or a C Corp, you're going to deduct the contributions on your corporate tax return. Let's look a little deeper. So there you go. For sole proprietors and LLCs, you're going to report it on the Schedule 1, line 15 of the IRS Tax Form 1040. So you can see line 15 says self-employed, SEP, simple, and qualified plans. Your solo 401k is a qualified plan. So that is where you'll be reporting your traditional contributions. Multi-member LLC or partnership. Here's the K1. So you're going to report the contributions in box 13, titled Other Deductions. S Corps, C Corps. There's Form 1120S, line 23. That's where you'll report those contributions. Also on your W-2, box 12. I'm sure you've heard about the 1099-R. It's used for all different things that are going on. Maybe you did a rollover, in-plan conversion. So you might be responsible for doing the 1099-R. I'll tell you when you're not responsible for doing it. Let's say you just opened your solo 401k with us. You're rolling over from, your traditional IRA from Schwab. Schwab is the one that'll actually generate that 1099-R for you. So when you do get that in the mail at the end of the year or the beginning of the following year, just make sure it says $0 under taxable amount. So they'll be responsible there. But you might be responsible for some 1099s within the solo 401k. and we'll go over the different circumstances. So just keep in mind the 1099-R is completed when funds are moved out of a retirement plan. It acts as a paper trail. Okay, so here are some examples when you may need to complete a 1099-R. In-plan Roth conversion, rollovers. Maybe you're rolling from, your Roth 401k account, your Roth 401k component out to a Roth IRA. You are in charge of doing that 1099-R. Required minimum distributions, early withdrawals, and regular distributions. You're in charge. Work with your CPA. Some important things about the 1099-R. It may not be filed with a PDF file. Only approved filers can submit that 1099-R. So most likely your tax professional can help you. And if they can't, lean on us for support. We do have some great educational resources and, of course, a great CPA resource list. So you must have your 1099 to yourself by January 31st. The IRS will need to receive the physical copy by February 28th or the e-file by April 1st. Here's a great article. We actually have a few articles about the 1099-R. Just go to our knowledge base, type in 1099-R. We have a compliance calendar on our website. It's great to refer back to this calendar. January 31st, your previous year 1099 forms must be mailed to any participants who received a distribution. March 15th, S Corps, LLCs, partnerships, it's your tax filing deadline. April 15th, corporations and sole proprietorships, your taxes are due. July 31st, Form 5500 EZ. And then we have some extensions. So September 15th for the S Corps, LLCs, partnerships. October 15th, corporations and sole proprietorships. And then December 31st, you have your deadline to make any Roth conversions. We send out reminders about your deadlines, but very important, take a look at this. Put this on your calendar. You are also the plan participants. If you're a participant, you're employed by the business, which means you get to roll over funds, make contributions, take distributions, take loans. If you and your spouse both work for the business, you guys can both be on the same plan. All kinds of great benefits to that. You know we've done a webinar about it. Go to solo401k.net. Look up our spousal inclusion webinar. It might benefit you and your spouse. Let's look at an example. So Jessica and Michael have an S Corp and are both being compensated from the business with W-2 wages. They can both participate in the plan because they're both getting wages from the business. So Jessica, she's going to roll in her 401k from a previous job. Michael and Jessica can also both make contributions because they're getting those W-2 wages from their S Corp. Michael and Jessica, they find a rental property that costs $400,000. Michael rolled in $200,000 from his traditional IRA, and Jessica rolled in $300,000 from her previous 401k. So Michael and Jessica are both using their funds and investing in the deal together. If they were both not on the plan, this deal would not have happened. There would not have been enough funds. So there goes Michael's rollover and Jessica's, and they're making their contributions. So they have funded their solo 401k, and they have enough funds. They can purchase this property. They're under contract. As soon as they wire the funds to the deal, now their solo 401k owns this property. It wasn't going to happen if Jessica wasn't on the plan either. And now they're getting rent checks in, all tax deferred. So let's look at another example. We have Jack and Lauren, and they need cash quick. They have a very high interest debt, and they want to pay it down. Jack has an LLC and reports income on his Schedule C from his LLC. Jack's wife helps Jack with the business, but she's not receiving any compensation. Jack has a previous 401k, and Lauren has a traditional IRA. Jack can roll over his funds and take a participant loan, but Lauren cannot participate because she's not being compensated. So that means she is not able to roll over her funds. She cannot take out a participant loan. So there's Jack. He's happy. He's got his previous 401k that he can roll into the solo 401k. There's Lauren working hard for Jack, not being compensated. So she's going to have to keep her traditional IRA where it is. It's stuck in just a regular brokerage account. She doesn't get to choose where to, invest her funds. She can't access these funds for a participant loan. So Lauren's not that happy. So you can see, Jack is being compensated. So his previous 401k rolls into his solo 401k trust. Since Lauren is not being compensated, those funds are not going to roll into the solo 401k trust. So Jack is the only one that can take the loan. So that means he can only take 50% or $50,000, whichever is less. If Lauren was on the plan, they could have potentially taken $100,000. So Jack funds his solo 401k with his previous 401k. Now he's able to take that participant loan. Remember, when you take a participant loan, you could use it for anything. So he's paying off the high interest debt. All right, number 3, the sponsoring business. So 401k plans are designed as employee benefits plans. So in order to have a 401k, you have to have, a sponsoring business. You can't just jump on Apple's 401k if you don't work for Apple. So, this sponsoring business is necessary to have the benefits of a 401k. But there's all different ways to, have this sponsoring business. You as a 1099 independent contractor, or maybe you're a sole proprietor, you're an LLC, you're a partnership, you're an S Corp, you're a C Corp. So typically you are the owner and the employee of the business. Of course, your spouse can be on the plan if he or she is being compensated. It's also really important to know that you cannot have other full-time W-2 employees except for you, your spouse, and other business owners. That is it. So because you are getting paid from your business, you can participate in the company retirement plan. This is your benefit as an employee of your own business. And you're that participant, so you're allowed to roll in funds and make new contributions. Remember, rollovers are going to come from other retirement plans, and your contributions are going to come from your employee compensation. These are the two ways you are going to fund the solo 401k and make your investments. Let's take a look at Harry. So Harry has an S Corp. It profits $1 million a year. Harry pays himself $100,000 in W-2 wages from the business. He's going to base his contributions on his W-2 earnings of the $100,000, which means Harry can contribute $44,500. This is our contribution calculator. You'll find it on our website, solo401k.com. You're just going to put in your business type, what your income is, and then your age. The solo 401k is the individual 401k. So it's going to be the first graph that you see. The rest are just comparing it to other retirement plans. You can just see how much more you can contribute in the solo 401k. You'll also get to see a whole summary of the breakdown. So you can see the W-2 income of $100,000, the employer contribution, the elective deferral amount, which is the employee. There's no catch-up because he's under 50, the max for the plan, and then the max that he is allowed to contribute. So even though Harry's business profited $1 million, he can only use his W-2 wages to calculate his contribution limit. It's really important. So the 401k is an employee benefit plan. So employee compensation is eligible for contributions. And last but not least, you are the plan trustee. So you're the plan fiduciary. You have signatory abilities over bank accounts and investments. So you are responsible to make sure the assets are managed and invested in the best interest of the plan participant and beneficiaries. So the most common scenario, you're the business owner and employee, you're the plan participant, you're the plan trustee, you're deciding where and how funds are invested. Your spouse can also be a participant on the plan, like we've discussed. Your spouse can also be a co-trustee. So they're allowed to make decisions. So it's all based on, what you want to do. Sometimes if there's two people on the plan, maybe, one of them will be the trustee. Maybe both. It's up to you and what you decide as a family. If you decide that one person's going to be the trustee and then you want to add the other person later on, not a problem. Send us an email. We'll update your plan for free. So let's go back to Jessica and Michael. Remember, they're both participants on their plan. So Michael has had some gambling problems in the past. Jessica is the one that makes all the money decisions in the family. Michael and Jessica decide to designate Jessica as the trustee. So that means, Jessica is in charge of signing for the bank accounts for the investments. So let's fast forward 5 years. Michael wants to have fiduciary responsibility as well. He has not gambled in years and he's ready to help take on this role. Jessica agrees. So they email us, Nabers Group, and Michael is added as the second trustee. So the plan participant versus the trustee. As you can see, we've gone over what the plan participant can do. You're employed by the company. You can roll over funds, make contributions, choose investments. You also have your signatory authority. You're not necessarily the one with the fiduciary responsibility. You can take distributions and take the participant loan. As the trustee, you do have signatory authority and fiduciary responsibility. So you choose. Will you be both? So quick little recap. Nabers Group, us, we are your IRS plan document providers. We never handle your funds or give you investment advice, but we're here to make this as easy as possible. Like you saw with all of our tools, our webinars that we do, our support team. So we want to make this seamless. Use our tools, participate in these great webinars. Go to our network. Use that Form 5500 Easy generator, the participant loan generator, and of course the contribution forms, our contribution calculator. And of course, email, call, or chat with us. It's great to be able to talk to a human being, and we absolutely get that. So reach out if you want to chat with a human. We are here for you. And of course, use the knowledge base, our network, our website. Like I said earlier, if you haven't been to these 3 different sites, check them out. They're unbelievable. We put a ton of work into this to make this easy for you and fun and educational. And let's go over your roles your 4 roles once more. You're the plan administrator, the plan participant, the employer, business owner, sponsoring the plan, and the trustee. You are wearing multiple hats in your 401k. That's what gives you this flexibility. As the plan administrator, you're keeping those plan records and you're completing your filings. As the plan participant, you're putting money in the plan from rollovers or employee compensation. As the employer business owner, you're sponsoring the 401k plan, and that's what makes it available to you as an employee. And the trustee, you're deciding where and how much funds are invested. One more time, our services and support. If you guys need my email address, go ahead and email support@solo401k.com. Also, if anyone that is not currently a client of ours and you want to jump on a call, please do. I'd be more than happy to chat. Go to solo401k.com/consult. All right, let's take some questions. Question from Katrina. Will there be a recording available after the event? Yes, you can always use the same link. And of course, go to our website, our network, solo401k.net for all of our previous events. Thank you, Katrina. Next question comes from Luis. Hi, if the solo 401k is self-directed, can you explain the fees, specifically the yearly one? Yeah, no, great question, Luis. So, the IRS makes changes every year. So we're here to educate you on the changes, let you know how the plan has changed. Also, every 6 to 7 years, there's a full restatement that's required. A lot of companies charge $500 and $600 for that. That's all included in the $99 a year. So your plan absolutely has to be up to date. And that is our fee. I know that we are the most reasonable fee out there. I've also talked to many people that are coming from a different document provider, and they weren't keeping their plan up to date. So now they have some pretty steep fees with the IRS. So you'll never have that problem with us. And of course, you have ongoing support from us. We do not charge every time that you call us. I just spoke to someone recently that's with a different provider, and they get a bill every single year with all the phone calls that they've made. So I think the $99 is fairly reasonable. Thank you, Lewis. It is a great question, and you're absolutely right. Next question comes from Chuck. Do I have to fill out a contribution form for every weekly contribution as I get paid? Can I say 100% of compensation until the cap is reached? It's really up to you, Chuck, how you want to keep record of your contributions. For me personally, I have a spreadsheet. If I was doing contributions, every week, maybe I would just put it on that spreadsheet. But I also like to over record keep. So I would probably fill out that form. But I do think that it might be okay if you just had a spreadsheet and put it on there for each time. It's up to you on how you want to be the plan administrator. But just think, if the IRS ever audited you, would you want to have more information or less? So it's up to you. We like to over record keep here. Great question, Chuck. The next question comes from Mary Beth. When setting up the solo 401k checking account with Solera, do we select solo 401k setup or IRA trust checking account? Great question, Mary Beth. You're going to select solo 401k. Good to see you here again, Mary. Another question from Mary Beth. Doesn't the solo 401k trust checking account need to be in place, opened and operating before a rollover can be processed? Awesome question. So what we do recommend is that as soon as you get your plan documents from us, initiate your rollover and open up your bank account at the same time. When you initiate the rollover, your releasing custodian is going to send you a check in the name of your trust. Usually it takes 5 to 7 business days for that. The bank account only takes 1 to 3 days. So doing it at the same time is okay. If your releasing custodian is okay with doing your rollover via wire, then yeah, you do want to get that trust checking account open first. So it depends. Most releasing custodians are going to send you a check in the mail. Some will wire the funds. So if so, yeah, Mary Beth, you're right. Make sure your trust checking account is opened first. Thank you for that question. Mary Beth, you can get a copy of this presentation by just using this link. And you could just watch it all you want. And of course, go to our network, solo401k.net, go to events, past events, and you will see this. It'll be there forever. Darren asks, is there a reason why you showed rollovers separate from contributions on your spreadsheet example? Yeah, great question. Because rollovers and contributions are different. So rollovers are when you're rolling over funds from another retirement account. So you might be rolling over traditional IRA, a SEP IRA, a previous 401k. So you want to keep the fact that you did a rollover separate from your contributions. Your contributions, they're based on your business earnings. So it's separate. you have rollovers. Remember, you can do unlimited rollovers, and then you have contributions based on your business earnings, and there are limitations to contributions. So we're talking about two separate things. I know terminology can get confusing. So let's recap. Rollovers are when you're rolling in, other retirement accounts, traditional IRAs, previous 401ks. Contributions it's new money based on your business earnings from your sponsoring business going into your solo 401k. Great question, Darren. It's always important, to understand the different terms. Maybe one day we'll do a webinar all about the different terms, what they mean. Thank you, Darren. The next question comes from David. Can you explain or illustrate the purpose of the purpose and how funds flow through a special purpose LLC? Great question, David. So let's say, you have your solo 401k plan that we provided for you, and then you opened up your trust checking accounts. So sounds like, David, you probably have, your trust checking account, and then you probably also have an LLC bank account. So how funds need to flow is new contributions and rollovers need to go into your trust checking account first. From there, you can move your funds out to your LLC bank account. When the funds are in your LLC bank account, you'll move that out to your investment. If you're using funds from your LLC bank account, the name on that investment is going to be your LLC name, not your trust name. So rollovers, new contributions into the trust checking account, then you can move it to your LLC bank account and then out to your investment. Let's say it's a rental property. You're getting rent checks in every month. It's going to go back into that LLC bank account. You can move funds back to the trust account because let's say you have, your crypto exchange and it's in your trust name instead. So now you have your crypto exchange in your trust name. So you'll wire funds from your trust account to your crypto exchange. So if your investment is in the name of your LLC, funds need to come from your LLC bank account to the investment. If your investment is in your trust name, it's going to come from your trust checking account. All rollovers, new contributions going into your trust checking account. When it's time for distributions, it's coming out of your trust checking account. Awesome question, David. Thank you. Question from a different David. Are you going to review voluntary non-deductible 401k to convert to a Roth 401k? My bookkeeper and CPA is on this. Oh, hi everyone. And well, today we're really going over roles and responsibilities. We do have a webinar titled Roth 401k in the network, so you can go and check that out. So go to our network, check out our previous webinars, and you'll find some great questions there. Also, check out the knowledge base. We have great information about the voluntary after-tax contribution, how to do in-plan conversions, all that good stuff is there. Thank you, David. Next question comes from Marie. Can a Roth IRA be rolled over into the solo 401k? Great question. Unfortunately, no. It's an IRS rule, but we do have a solution for you. We offer a self-directed Roth IRA. It's very, very similar to the solo 401k. A lot of our clients, that have a solo 401k also have Roth IRA funds that they want to be in control of the investments. So they'll get the self-directed Roth IRA as well. So it's a great retirement account, Marie. If you have Roth IRA funds that you want to utilize similar to the solo 401k, let us know. I'd be more than happy to go over how the self-directed Roth IRA works. So the answer is no, it doesn't roll in, but we do have a solution. So thank you, Marie. Great question. Question from Darren. So I need to have 4 categories per participant. 2 rollover categories, 1 for the 401k rollovers and 1 for the traditional 401k rollovers, plus 2 traditional categories, 1 Roth and 1 traditional. Yeah, that's perfect, Darren. So yeah, not just 2 rollover categories. I would just notate every time you do a rollover. That doesn't really have to, I don't know if that needs to be categorized, but I would say, have a line that says when you did your rollover, what kind of rollover was it? Because you might be doing it at different points. So you can just add a line item there. Keeping your contributions, the different classifications separate, perfect, absolutely. So yeah, no, you're on it, Darren. That makes sense. Perfect. Luis, can you explain the process of moving the solo 401k from my current holder to you guys? Yeah, it's pretty easy. You'll actually just go to our application and you'll click restatement. How about you jump on a call with me so I can go through all of this with you? I would love to chat. I think we may have chatted. I would love to chat again. It's very simple. Shoot me an email, support@solo401k.com. Attention, Alana. So we can kind of go over your process. Because I see here you have some outrageous fees. $550 from your current plan provider. That's not fun. Come to us. We're more reasonable and more fun. So shoot me an email. Question from Darren. How much does the self-directed IRA cost? Awesome question. The fee is a little higher because we're going to do a lot more for you. We're very hands-on with this. You do still get absolute full checkbook control, but we are rolling your funds in for you. We're setting you up with a special purpose LLC because you're going to use an LLC as opposed to your trust name that you have in your solo 401k. We're going to also open you up an LLC bank account. So we're taking care of all kinds of good stuff for you. So setup fee, $995. And then the annual fee is $325. That's it. We're not taking any transaction fees, nothing else. So if you're interested, let me know, reach out. Anyone that needs more information about anything in particular, shoot us an email. We can absolutely jump on a call. Thank you, Darren. Great question. Question from Raj. My wife and I own a company, file as a partnership with the IRS. The company has a solo 401k plan. For me to be a plan participant, I needed to be compensated by the company. Does that have to be as a 1099 contractor or does it have to be a W-2? Does taking the partnership distribution show on a K-1 count as compensation? So if you're a partnership on K-1, Raj, I think it's line 14 is the self-employment line. If you're showing funds there, you're being compensated and you are paying your self-employment taxes, which means that you qualify. So I think you qualify. I'm not sure if you already have a solo 401k plan, but anyway, yeah, it all depends on where funds are showing on that K-1. It might count as compensation. So Raj, I look forward to hearing from you. We will give you a call as well. I did see your name pop up today. So we'll go over that completely in a great 30-minute one-on-one conversation. And if anyone else wants to have a conversation, please, solo401k.com/consult. Be more than happy to chat with every one of you. All right, awesome. All right. $250 for loan paperwork. Oh, Lewis, you're coming to our company. That's crazy. Okay, I'll give you guys a few more minutes. This has been a really fun webinar. I think we all learned a lot. Thank you, everyone, all the great participation. We love when you have great questions. And I love when you guys answer each other's questions. Very cool. And just as a reminder, everyone, 3 ways to get support from us. I know I mentioned our network like 50 times, solo401k.net. Find the replay for this. Find our other presentations. They're fabulous. Talk to like-minded investors. Ask questions. Our website, solo401k.com. It's like having a solo 401k library at your fingertips. So use that, use the calculators, and then our knowledge base, lots of step-by-step guides. David and all your people that are on this, that's where you're going to find great information about voluntary after-tax, in-plan conversions, how to do the 1099. So check it out. This has been great. If anyone has any ideas for our next webinar, post it in the network. I'd love to hear what you guys want to learn about. David, I know you want to learn about voluntary after tax. If there's anything else, let us know, because we did go over that in the last one. But if anyone else has ideas, what you want to learn, please post it. And thank you for participating. Anyone that needs some additional help, contact us. Have a happy Wednesday.